Okay, so let's take a look at this week's portfolio. It has about 38 stocks in it. 83% of them are in the US, 17% are foreign, and the foreign countries are the UK and then some of the developed European countries. At first glance, we have all of the securities, or all the stocks except 2% of them are large caps, so they're very large companies. 28% of them are classified as value, 52% as core, and 17% as growth. Going down here, we have a table that compares the sectors of our portfolio to how the S&P 500 sectors are structured. Looks like we're kind of close overall. For instance, cyclical, sensitive, and defensive characteristics are fairly close, but once we kind of get into the detailed sectors, it's a little bit different. In particular, we're way overweight of energy compared to what the S&P 500 has. And that's mostly because energy's had a pretty tough time recently with low oil prices, and so we're viewing them as being pretty cheap at the moment, and so we've weighted up on the energy sector. The S&P's technology sector has a very high percentage, and we're a little bit lower than that. Technology's had a really good run recently, and that's why the capitalizations are so high. But we're going a little underweight because they may be a little frothy. And we're a little bit underweight financial services, consumer cyclical. The financial services are somewhat having a tough time right now as the long-term interest rates are slowly going up, but the short-term interest rates are going up a little faster and kind of squeezing their net interest margin. And we're a little bit overweight utilities as well. Okay, so then we have a split up of the stock type between our portfolio and that of the S&P 500. The main difference is the hard asset category here, which would be all of the energy stocks, which is what we're loading up pretty heavily on. And we're a little bit underweight on the cyclical category as we're kind of in a late bear market and things may be kind of getting a little high in market prices. You notice here we don't have a whole lot of growth companies, and that's mostly due to the way we select stocks. It normally comes out to more value characteristics. So let's go down and look and see how our a bunch of ratios compared to the S&P 500. For instance, the price and earnings ratio is 13.49 of our portfolio, and that's about 81% of the S&P 500's price earnings ratio. Same thing for the price book ratio. Ours is about 86% of the S&P 500's. So those are key characteristics of value portfolios. It looks like our return on assets is a little bit lower than that of the S&P 500, but our return on equity is much higher. Also, we can see here that our projected earnings per share growth over the next 5 years is a little bit less than that of the S&P 500, and that's characteristic of a value portfolio. Also, our yield is it's almost double that of the S&P 500, and that's the dividend yield. So another characteristic of value portfolios. And also our market cap is about the size of the S&P 500, but our companies overall are a little bit smaller. So our top 5 holdings are Total, GlaxoSmithKline, Microsoft, Exxon, and Air Products. And you can see that we've got significant portion of energy companies, but all the companies in our portfolios are household names. You probably recognize these names. Very large, well-known companies.